Finally, Raymond, who is a partner here in Hong Kong at Sidley, Austin. And so Raymond, come on up. And we have some other people who are here from Sidley, Austin. Constance, are you in the room? Constance Choi is here. Why don't you stand up and say hi to everyone? So we have the leading lights of Sidley, Austin here tonight with us. And so we thank you for your support, by the way. Okay, I get to moderate.
And you will be our best moderator.
I didn't say best, I said favored. Oh, I'm in so much trouble. Thank you, Yasin. Okay. Why don't we just go down the line and everybody just tell a little bit about yourself and something exciting that you're working on right now.
Something from me?
Jerry, you can go first.
Yeah. Thanks, everyone. I come from Beijing. That's actually today 7 hours on the plane. It's a horrible traffic jam.
You were up at what, 6 a.m.?
Oh, woke up at 5 a.m. something.
5 a.m.
I just arrived.
Wow.
What a terrible day. I'm glad to see you there. See you all here.
Yeah, well, please stay with us for dinner, too.
Yeah. Thank you. Yeah, I come from this China Creation Venture, CCV. Actually, it's a new established brand. Our team previously worked for the Klein Perkins, actually separate from the Klein Perkins 1 year ago. And yesterday exactly was our 1 year anniversary. So we
congratulations.
Thank you so much. We focus on early stage TMT, and all have been together, our team, for almost 10 years. We have invested GD.com, GD Finance, and a lot of the unicorns. We are actually happy to announce that we did some quick calculation. 30% of our investment went to became the real unicorn. So yeah, love to share more.
That's a pretty high percentage.
Yeah.
Yeah. Okay, you'll have to share your secret later on.
Yeah.
Hi, Nazar. This is incredibly loud. I introduced myself earlier, so I won't do that again. But I can sympathize with the jet lag and the travel. Flew in from San Francisco. I'm flying to Mexico tonight, and then Brazil, and then Dubai, and then Abu Dhabi, and then Saudi Arabia, and then New York, and then DC. So a lot of time on planes. That's me.
I've found it's easier once you get going just to keep going, right? If you stop in the middle, it's torture.
Yeah, people ask me where I'm based, and I say, well, in theory, I'm based in San Francisco.
Right.
In practice, it's on a plane. But
okay,
anyways.
well, hopefully it's business class. Okay.
Okay, hello. I'm Michael from Legend Capital. We are originally from the Lenovo, the computer company. Maybe some of you know Liu Chuanzhi. Liu Chuanzhi think selling computer is a very low margin business, so he wanted to start a more fancy business model. So he set up a venture capital firm to help them fund them. So we have been 17 years old. Our fund has been managing $6 billion US, and we are my recent focus is helping the Chinese entrepreneurs doing emerging markets startups.
Okay.
Okay,
Raymond.
Hi everyone. I'm the only borrowing lawyer here, so other than Constance and actually Sandy as well. So we're from.
Wait a minute, she's not boring, is she?
I'm the only borrowing one. So we're Sidley. We're an international law firm. We help lots of companies go on the raise capital, all kinds of capital, and later on, which we'll talk about, listing and one of you on the stock exchange in Hong Kong. We have across Asia. We are Beijing, Shanghai, Hong Kong, Singapore, Japan. So we are pretty Asian coverage. I won't bother you with the details with US, but we're here to satisfy your capital needs.
Okay. Well, let's go back to Jerry. You mentioned 30% of your portfolio companies have become unicorns. Yeah. So how do you accomplish that? What's the secret?
Actually, secret is that we don't invest too much. It's a joke. Actually, we focus very early stage, so actually we pick very carefully in each sector to pick up the winner. Actually, for each sector, we only invest in 1 or 2 company out there. So in past 10 years, actually, compared to other, funds maybe who invested 100 portfolios, actually we manage right now around 40 something TMT. Yeah. So I think what we do is keep a very limited elite team and work closely with the industry. Actually, all the partners and the key teams all come from the industry, which is a half blood, 50% of blood is entrepreneur, another is an investor. Yeah.
Okay, so it really helps if you have that tech experience to begin with before you become a VC. That helps with your record?
Yeah. Actually, my background was a telecommunication background.
Okay.
And I was when I graduated was engineer. Worked for China Mobile. Then after 3 years working with China Mobile, I felt wow, maybe the life is too boring with such a giant. Then I joined Tencent, a very early stage of Tencent, almost 400 employees out there when I'm joining. Become a product manager and manage product all the time, and then work for Microsoft, launched Bing.com in China. And then in 2011, I just start to try our venture capital, start my venture.
Okay.
Yeah.
Sure.
Yeah. So all my team members, almost, they are very much like me. So my managing partner, Joe Wei, Mr. Joe Wei, worked for Client Pickers for 10 years, and he also had his, startup, and sold the startup. Then decided to have fun with the Walton School. Then after graduates, and joined Client Pickers. So that's a kind of the DNA our team have.
Okay. Well, I like the name, China Creation Ventures.
Yeah,
Good
we
name.
want to create something big.
Okay. The next Alibaba, the next Baidu.
Yeah, we really want to, but it really depends on our luck, right? We don't always have that luck. Yeah.
Okay. Nazar, how do you find your home run deals?
Well, first I got to say we have the worst name of the 3 firms up here. You know, I love the name of your firm, and then Legend Capital. It's just unbelievable. You know.
Well, I think Rise is pretty good.
It's
Yeah,
just
that's
similar
all right.
to
Rise
the-
Capital.
its Chinese name.
Yeah. Well, what's that?
Just similar to its Chinese name.
Okay. Yeah. No, I love the names of your firms. How do we find unicorns? Yeah, we're ex-operators as well. I think that's critical, right? So, you know, I used to run, you know, what became the Facebook of Russia, and that was one of the first unicorns outside the United States. And all my partners are ex-founders as well, right? So, you know, one of them founded diapers.com, another one founded, the largest e-commerce company in Brazil, and so on and so forth. And so you have to have, I think, the perspective of having navigated these markets and, you know, understanding some of the idiosyncrasies of running businesses in these markets. So, you know, I remember when I was running my company, and I'm a guy who grew up in California, and, you know, I worked at Goldman, and I went to good engineering schools and law schools and business schools, and in spite of that kind of network, I'm sitting there running this business in Russia, and I'm calling my friends and saying, what are you guys doing for payments? And they're like, well, just use PayPal. I'm like, there is no PayPal, right? Where are you guys hiring your engineers? Oh, we're hiring them from Stanford. I'm like, great, nobody wants to move to Moscow, so what do I do, right? And so, you know, navigating those challenges in these markets, I think, is you have to have lived that to be able to add value to portfolio companies at an early stage. So that's pretty critical. Beyond that, I think it's just looking for, just being very selective. I think you hit on that point as well. You know, for every few hundred companies we meet, we might invest in one. You know, and like just spending the time to really understand the market opportunity, understand the dynamics of the supply chain, understand how the founder and the team is differentiated there. What kind of moats are they building? You know, what kind of metrics do they have? You know, how can you quantify, you know, how good of a job they're doing in their space? And so, you know, it's a lot of work, but, better to swing at fewer pitches and just make sure those pitches are home runs, right? So that's kind of our approach.
Okay, thanks. Michael?
those Chinese teams doing startups in the emerging markets, they are growing very fast. Like my first portfolio in Legend 2 years ago, when they have only 10 million users around the world, but 2 years later now they have like 460 million users, and 88% of them are growing organically. That is why. That is because the whole world, the other 3.5 billion people, besides the Chinese and the American, are changing their feature phone into the smartphones. So that is a huge opportunity. So the biggest company around the world is Apple, right? But those people cannot afford Apple. So there are many companies just trying to be Apple in those markets, like Xiaomi, like many other Chinese second-tier phone factories. So it's a huge opportunity. And the other one, we was in e-commerce in the Middle East. They have a very high penetration of smartphones, but they have nothing besides oil. So they can only buy the famous brand from Europe, but they don't have a high quality but relatively low price supply chain. So this company, when we invest in the B round, it's like only 100 million valuation, but now after 1 year, it had turned out to be a unicorn. So like 7 or 8 times in a year, yeah. So they have doing 3 right things. First is focus on the Middle East. Second is all in the mobile. The third is all in the cash on delivery. So they are trying to solve many difficulties in those areas. But I don't think, maybe some American guys, they hate to doing things like that because of dirty work. But Chinese people, they can't do that. So in many spaces around the world, like the Arab world, the first local language games are all developed by the Chinese companies. That's a huge trend. Yeah.
Raymond, do you want to add to that?
I'll pass on that one.
You'll pass on that
I
one.
decided that actually, Rebecca, next time, since we're the sponsors, I should get to ask the questions.
Oh, okay. You want to ask a question?
next
then?
time, I'm kidding.
You go ahead and ask a question.
No,
I've asked a
kidding.
lot already tonight. So, okay. So we talked a little earlier about technology sectors that are hot, and we talked about AI, but we didn't really talk about any other sectors that are rising in China, and I'd be interested in, or globally, I'd be interested in what your take is on the next hot sector.
Yeah, I would rather start with the, usage segment. Actually, in China, it's quite very kind of very specific. Actually, when we look back 5 years ago in China, we often refer to the users we call internet users. We often refer to them, actually, they locate in tier 1 cities, Shanghai, Beijing, Guangzhou, something. But today, with the concentration of the smartphone, tier 2, 3, 4 cities, they are actually being standing on the stage and support the business moving forward. We are actually astonished to see some unicorns like, for example, Douyin, right? For example, Kuaishou. With those kind of the users, they never have reached entertainment method. Actually, they spend a lot of time every day, 4 to 6 hours per day on the app, only to want to attract users, attract their audiences. They spend money on that and spend all their effort on that. So that kind of a new segment is actually supporting the new growth of the trend. That's number one I want to address. Number two is that with the infrastructure of China, especially payment infrastructure, in the past 2 or 3 years, thanks to WeChat and Alipay, users actually are paying. So we see when everybody show the actually pay from the mobile phone. Actually, that really saved some segment. For example, online education. We witnessed tremendous growth of the revenue from this sector of companies in that. 5 years ago, they are struggling to about the business model. People love it online, but seldom people pay for the content. But right now, all the users are paying for the good content and for the qualities of the contents. We invested, for example, the biggest platform, Himalaya, which is an audio sharing platform in China with 550 million users, registered users per day. I mean, in total, right now, half of the revenue come from the audience subscription. That is, we cannot imagine that 3 years ago, but with the infrastructure right now, they are doing it. So that's, I think, the very unique part of the China landscape. And when we're looking back to the history, actually before the year of the 2013 and 14, a lot of the innovations actually come from the United States, come from the Silicon Valley. Entrepreneurs in China, they tend to copy to China model and to attract VC before that. But after the growth of the explosive growth of the China internet specific China internet, mobile internet, actually we see local innovative business models, a lot of them. Actually, when we stay with Klein Perkins, we have some difficulty to try to persuade our U.S. partners to let them know what is happening in China, because they are too far from the market. They never understand how people can sing online karaoke with their smartphone. Yeah, they don't understand the culture. But right now, when we go, they're independent. When we separate from, build our new brand, we do local decisions. So, our investment will be much quicker. And yeah, that's what I want to say.
Are you doing anything today with Kleiner Perkins? Is there any collaboration at all with the team back in Silicon Valley?
Actually, we still sit on some board of our portfolios. We invested, yeah, but we have the separate brand and focus on China only right now. Yeah.
All right. Yeah, no, I remember covering Kleiner Perkins as a journalist, covering Kleiner Perkins when they first set up in China.
Really?
Oh, yeah, Tina and Joe.
Okay.
Yeah, I know both of them.
Yeah. This Tina retired, remember?
Yeah, well, Joe left Kleiner to go with Ketone.
Earlier. Yeah, Ketone. He's established Ketone. She's doing good, right?
Yeah.
Yeah.
So at the same time, Sequoia Capital was going into China too. Yeah. So this was back in 2005.
2005-07. Yeah.
Yeah. I remember it well. Yeah, it was a tough story to follow because things were happening so quickly, just like they are today, but in different ways.
Yeah.
So, okay. God, I forgot what my question was. Nazar, what was my question? Raymond, help me out here. What was my question?
I think you asked, what things are people excited by, or
yes,
along those lines?
Exactly.
You want me to go?
Yeah, go.
Yeah, I mean, for our markets, we invest in emerging markets, largely ex-China, right? And so, India, Southeast Asia, Africa, Middle East, Latin America. And, it's really a timing issue when you sort of think about what's going on in those markets relative to the US and China. And so, the US passed 50 million internet users in 1996. China passed that in 2002, right? Indonesia passed that like last year, right, or 2 years ago. And, so it's a much more recent emergence of the consumer internet and the enterprise internet. And so you're seeing a lot of different opportunities now in those markets than what you're seeing in China or the US today, which are much more mature internet markets. And so, whether it's, in sort of the services economy in different marketplaces, or it's in the financial services economy in different fintech plays, or it's in the e-commerce economy in these markets, or whether it's in the SaaS space, you're just seeing a lot of activity and a lot of new companies emerging and getting to scale. So there's a lot of opportunity that we're seeing.
Is there a particular area that you're excited about?
Well, we do all of that. So, I love all my children equally, so to speak. But
I mean, everybody talks about fintech, AI, big data. You have all those.
yeah, I mean,
and more.
yeah, I mean, so for us, we think that these are just a lot of Silicon Valley buzzwords, honestly, right? And so,
point.
fintech is internet-driven financial services. That's all it is, right? E-commerce is internet-driven retail. Marketplaces are internet-driven services businesses, right? Over-the-top companies are internet-driven media companies, right? So these are just, they map to traditional sectors of the economy, and they're just internet-driven business models that address those segments of the economy. And so, we try to just kind of demystify things in terms of, how we refer to things. So these are massive sectors of these economies, whether it's in Africa or Latin America, or whatever the case may be, that are being disrupted by internet players because the offline traditional incumbents in those markets, look, if you're in the US, you're dealing with the JP Morgan Chases of the world in financial services. You're dealing with, companies like Walmart in retail. You're dealing with companies like HBO in media. And when you look at Africa or Latin America or a lot of these other markets, the offline incumbents are not run nearly as well as those companies I just mentioned. And so you're seeing a lot of disruption coming from the internet players.
So you talk market segments. What is the market segment that deserves to be disrupted the most?
It depends. It depends on the geography. I would say,
Okay.
Africa financial services is just a enormous opportunity. And so access to credit, insurance, payments, even the concept of identity in Africa. There are entire segments of the economy that, we expect governments to take care of identity. And governments in places like Africa don't. They don't have social security numbers. And so when you think through what's missing in the ecosystem to be able to layer different services on top of that, in places like Africa, you can actually own you can literally become the social security provider in some of these countries. I mean, it's a completely different, lack of infrastructure that you're talking about in these markets. And so you can capture a lot more of the GDP opportunity.
Okay.
So it really varies geography by geography in terms of how you approach this.
So let's take India. What needs to be disrupted in India?
Many people think India is a country, and it's really a region when you think about it, right? So it is, a lot of people make the mistake of saying India is the next China. No, it's not. It's very different than China. China has many benefits, that accrue to it by having a largely monolithic language and largely monolithic infrastructure and, the great Chinese firewall and things of that nature. And India is an extremely fragmented market. And when you're sort of on the ground there trying to do offline activities related to your online business, so delivering products, taking care of things like logistics.
A nightmare.
There are complications that arise in a very, very big way that completely change how you approach that market versus a market like China. And, how do you address, segments of the population that don't speak English? A lot of people in India speak Hindi exclusively. And so, you have to think through these things as you're mapping out the market opportunities there. So India is much more like a region than it is a country when you think about actually, investing in services there.
Okay. Michael, you just reminded me, I remember going to China many, many times and thinking, okay, well, I could get around even though I didn't speak Mandarin. And so when I went to India, I think, oh, this will be easy here, right? Everybody else speaking. Well, no, more people spoke English in China than in India that I encountered. So it was kind of an eye-opener. But anyhow, Michael.
So actually, maybe you don't know, so Chinese entrepreneurs and VCs are very anxious these days. They don't know what to do because they are facing a fierce competition from the Alibaba and Tencent. Because the main business of Alibaba and Tencent is their growing is very slow. They have pressures to grow, so they are trying to buy out or invest in a very, very early stage. And People are trying to looking for growth from 3 places. One is the WeChat ecosystem. Yeah, this is the first one. The second, in the WeChat ecosystem, there have been many companies more than $10 billion valuation. So maybe this is a surprise to some of you guys. The second is they are trying to cooperate with the traditional giants to go against the Tencent and Alibaba. But this way is maybe some kind of slow. And the third one is globalization. So recently, Alibaba just sent 3 of them partners into the global markets. One of them is Peng Lei. Peng Lei is going to be the CEO of Lazada. And Yu Yongfu used to be the CEO of UC. He just resigned and he's starting some kind of business and also fund to do something in India. And also another partner another partner, he is just recently resigned to be the CEO of AliExpress. So he is very, focused on this area. And I think more and more entrepreneurs are trying to find these kind of opportunities because every day Chinese VCs are looking for next BAT. BAT means Baidu, Tencent, and Alibaba. But if you invest one of them, you can have you can have a bigger return than all the other portfolios altogether in this maybe 5 to 10 years. But when you look at the investors of BAT, most of them are from foreigners. Like Baidu's investor is DFJ. Alibaba's investor is the most famous one is SoftBank, and Tencent is Naspers from South Africa. So why is this? I think maybe the crucial reason is the money is different. When they're trying to invest China market, they don't have this kind of market. It's a very similar thing in the emerging market right now, like Indonesia. Some traditional retail giants, they know I want to embrace the internet. I want to do the e-commerce, but I don't want to lose money. I need to do e-commerce well and profitable. I don't want to burn money. So they are still in that kind of mindset. So I think it's a huge opportunity because we have the different money than the emerging markets.
Yeah. I mean, if you look at the venture deals and where the volume is coming from, Tencent and Alibaba are really driving it. And so that's something that's a phenomenon in China I think it's pretty unique to China, that they are commanding. And to pick up on your point about are VCs anxious about that?
To share data to everybody, actually we see registered VC or capitals in China is around 20,000 something. So in the whole market, there's a lot of the investors throwing money in the market, especially RMB fund. And for a lot of funds, it's their first fund. They don't know what really the risk out there. So often when we go to the market, meet an entrepreneur, they often have several, term sheet at hand. Say, hey, do you want to raise the valuation, or we will deny you? That's a trend we're seeing right now for RMB deals. So if we look at another trend to see, everybody is saying traffic is going to, actually it's very expensive right now for the consumer internet. And Alibaba and Tencent ecosystem is dominating the whole network. So that's why we're seeing a lot of the VCs chasing after some icon deals and pushing up the valuation very high. So I think for the market, there is some anxiety out there. Also talk to our colleagues and friends in the market. They claim that yes, currently they're not actually money is more cheap than before. Yeah, yeah. But to our view, because as our investment philosophy, we invest in Series A and Series B and sit on the board, actively sitting on the board. So we often tell our portfolio CEOs, you can, to receive money, actually every dollar have to mean something, because when you get $1 from investor A, maybe it's a Japanese dollar. From our, it's a US dollar. It's more valuable. Because on the board, we do some actually really persuade or talk with the CEO to switch to the business model when they hit the wall, and make great decisions. I mean, make the decision that really change the track. For example, when we sit on board on GD.com, the CEO actually want to persuade everyone to build the logistic network, which burn a lot of money. Actually, everybody except us vote for the opposite vote.
But it turned out that was the correct strategy.
Yeah. We support it greatly because that was a key differentiator of GD.com to the current its rival. So, yeah.
And that's also related to the growing impact of China's bot companies of getting into many verticals across industries. And so it's not just Baidu in search, Alibaba in e-commerce, Tencent in social messaging and gaming. They're getting into all kinds of things. So is that good for startups? Is it good for the startup culture, the venture capital culture? What's the long run impact? Go ahead.
Yeah, I have a perspective on this. I mean, Alibaba and Tencent and Baidu are not going to make the same mistakes that Yahoo made, right? And so late 90s, there was so much talk in the Valley about, oh my God, how are any new internet companies ever going to emerge because Yahoo owns everything? And Yahoo got complacent, and they lost so many opportunities because they were complacent. And obviously you're dealing with a new breed of internet company in Alibaba and Tencent and Baidu, who they recognize that and they want to have their fingers in as many pies as possible.
Yeah, Facebook has done the same thing, right? Because they're acquiring, but actually the businesses they're acquiring are more related.
They're more related, because I think, just the investor base is a little bit less patient with companies like Facebook. And these last few weeks have shown us that it would help if Facebook was a little bit more focused on what they do day in and day out, rather than going too far afield. But Tencent, Baidu, Alibaba, I think that's what's driving the activity very clearly, is they don't want to become like Yahoo, right? And whether or not that's a good thing for the ecosystem in China, I think there's probably pros and cons. It is. Part of the venture ecosystem is the dollars being allocated by those big players, and that's certainly helping to pick winners, I think. And so you're boxing out once one or two or three winners have been anointed by the bats. That's it. The market's over, right? And so you need to be in one of those three companies, basically, right? So it is having some interesting consequences.
That's a market where size really matters, market dominance, and first mover advantage. So if you get that kind of backing, you can obviously do that. Can we get our slide back? Okay. Maybe they're trying to showcase Nazar's point there. Okay.
They're trying to tell us it's dinner time.
Well, I don't know, but Raymond, we haven't even gotten to IPOs yet, and this is one of the big trends today. If you don't get snapped up by one of the bot or the TMD, the newcomer companies from China, then I guess there's still the pathway to an IPO. And so today, I've covered a lot of Chinese companies going public in New York already this year. But I know Hong Kong had some of the winners last year, and Hong Kong is doing some reform. So maybe you could talk about how this is going to change.
Okay, it's my turn. I'm the sponsor. I
It's
get
your,
to speak now.
it's your turn.
Okay, I'm just, yeah, thank you.
Okay.
No, I'm kidding. So, thanks for that. Hong Kong IPOs this year, 2018, is supposed to be the year for Hong Kong IPOs. So I'm sure you've read about it in papers as well, but that's the general consensus of most players until Mr. Donald Trump decided to do something called the trade war. So we don't know what the impact will be on the markets right now, but certainly I believe that most players in the market still believe that it's going to be a strong year for IPOs. So and the U.S. could be a factor, and as well as as you all know, we have the Hong Kong Stock Exchange has been liberalizing its rules to list companies. I will highlight two. One is the pre-revenue, i.e. no profits, but this is restricted to biotech companies for the time being. So they have.
Has that gone into effect now?
It's it's almost done.
It's almost done.
Yeah.
Okay.
So Charles Lee, basically we had two consultations. The second is not a real consultation. It's basically telling the market that we're going to do it. So just how we're going to do it. So it's going to come if we already have been engaged on some matters which are targeting filing in May. So there's a lot of background discussions going on, and people are doing it. So
Is one of the changes about the dual class structure?
yeah, that's the other change. So the biotech company, there's a new chapter 8A, and then they chose a very auspicious number, and there's a new chapter 18A for the companies with WVP, the variable voting rights, for WVR. Yeah.
So that's the reason that the Hong Kong Stock Exchange lost Alibaba. Is that right, over the dual class structure?
Yeah, I think Charles Lee, the chairman of the stock exchange, was pretty pissed off by that. So he's going off all
Okay.
out, and I think it's definitely coming into effect.
Right.
So for that, for you guys, the takeaway is really the stock exchange says that you will be as long as you're an innovative company, you can apply this variable voting right.
Right.
So, but they said that at the same time, well, look out for a guidance letter on what innovative means.
Right.
Yeah.
So I understand also that mainland China is fast-tracking certain innovative companies. The Foxconn IPO went through really fast, and it ticked off some others who were in the queue.
Yeah.
So can you talk about that?
Well, I think there's always the tussle between the Shanghai and Hong Kong, and this competition.
Right.
But,
We got the message on the slide maneuvering over there. We got the message, but
it's dinner time.
But okay. Well, just give us a few more minutes, please. Okay. Go ahead, Raymond.
Yeah. So on the one hand, they are liberalizing to attract the bats, right, to go back. But on the other hand, I think for the smaller companies, smaller startups and smaller tech companies, I think they'll struggle in PRC for the time being because of all the regulatory. For us who are in this space, you know that for 1 year they're liberalizing, for the next month they're closing the door, so it's kind of difficult to.
Difficult to predict. So where's Xiaomi going to go public? Hong Kong or New York or both?
Oh, I don't know about that. Yeah.
Anyone
Well,
else?
I'm hoping I'm quite sure it'll come to Hong Kong.
You think it's going to be Hong Kong?
My bet is on Hong Kong.
Your bet is on Hong Kong. Okay. Well, that's the next big IPO, right? Okay. Anything else we haven't covered? Anybody? Okay, I know you guys want to go to dinner, so we're going to wrap it. Thank you so much for joining us, and let's get a group photo here as well before we totally conclude here. And thank you so much.